Hello, everyone. Welcome to RC Molina Bookkeeping and Tax Services U.S. Taxation 101. For today's agenda, we will be entering Schedule K-1 for partnership using the Drake Tax software. In this video, we will go through on how to accurately input these forms for your clients and ensure that they are reported correctly in their tax returns. So, are you ready? Let's begin. So let's define first what Schedule K-1 for partnerships is. These are forms that are used to report the income, deductions, and credits that flow either through from partnerships, as corporations, and trusts or estates, directly to their owners, shareholders, and our beneficiaries. So let's begin for the tax exercise 1, Schedule K-1 in the form 1065 for partnership. So what we have here on the right side are the client information, including the partnership name, EIN, side trusts, and all of the partners' name, as well as their ownership percentages. So under the Drake tax software, under the general tab, what we need to do is to input first the general partnership general information. So you input all of the details here in the Drake tax software. And also do not forget to input the general information for boxes A, B, C, D, A, B, C, E, G, H, and K. So for box G, please take note that you only need to tick these boxes if these marks the return that you are working on. So it's for if it's an initial return, you tick this box. If it's a final return, your final return means the business is under closure. Amended return for any amendment filings, for any address change or name change or superseding SUP, you tick these boxes. So if none of these you're working on for the tax return, then you you must need to skip this one. So also please don't forget to tick the box for the correct accounting method for for your client that you're working on. So once this is done, just click the escape button and then move with the income button. So in this particular example, you can find the income on the profit and loss for your clients. For this particular example, we only have sales here. So let's just input directly the 177216 here and then move on with the deductions. So under the deductions part, under in RC Molina, we have our um in-house working paper that reflects mirroring directly the actual tax return. So it will be easy and no hassle for us to input um as far as the deductions are concerned. So once everything is inputted here, just move on to the next tab, which is the Schedule K-1 partner information. So from here, what we need to do is you need to just double click that one and then input all of the client information for the partners. So you need to input the EID number, the maximum percentage owned, which is 40%. Also, you need to input it here, the partner's percentage form for the profit, loss, and capital. And then please do not forget also to the partner type, not the partnership. So if it's individual, put it in the individual. And then also the partner capitals account analysis. These figures here can be found under the balance sheet of the company. So for this particular example, the figures here are assumed to have been verified and are all assumed correct. So for this particular exercise, once we have already inputted the information for partner D in here, let's move on to the next partner. But also, I would just like to note that this exercise only pertains to Schedule K-1. And then as far as the partner basis computation is concerned, this will be discussed in a separate video tutorial, which will be uploaded in a separate video. So let's move on to the next partner here. So once we have inputted all of the partners information for Dean, Dixon, and Donovan here, we can just save this one and then view the actual tax return. So this is the actual tax return for the partnership income 1065. As you can see, it is reflected here the ordinary business income at 84,809, which is basically almost the same or tallying with our working paper at 2.75 variance due to rounding off. So you can also see from the schedule from the tax returns the Schedule K or the partner's distributive share items here. These figures here are automatically computed based on the ones that we have inputted on the figures that we have inputted earlier. So also this is the actual Schedule K1 form 1065 for every partner. So all of the three partners that we have inputted information with earlier, they will be given this schedule, which they will be using in their individual personal tax returns 1040. So as you can see, it is reflected here, the percentage percent of ownership for this particular partner, Dominic Dean. This 40% represents the 33,924 of the total ordinary business income of the partnership, as well as also it is reflected here the Schedule K1 supplemental information. Dominic Dean's share on the non-deductible expenses, 40%. This is the 40% figure of all the non-deductible expenses of the partnership. So also you can see from the tax returns, the statement A, QBI pass-through entity reporting, uh, reflected here his share on the total partnership income. So these are the remaining two Schedule K ones for the remaining partners for the Donovan and Dean. So also, lastly, you can see also the capital account reconciliation for all of the partners from their beginning capital accounts, all of the contributed capital contributions during the year, any share in the current year net income or loss, and any withdrawals and distributions reflecting the final ending capital account, which should match the actual balance sheet capital accounts. So this is the end of the video. So I hope you will learn something from RC Malinaw Bookkeeping and Tax Services. Thank you.